Good morning, everyone. This is Hadjikyriacos, analyst at IronFX, bringing you the morning comment for the 16th of November. USD gains after inflation data. Tax bill in focus. The US dollar strengthened a little yesterday in the aftermath of the US inflation data for October. The headline CPI rate dropped as expected, but the core rate surprisingly rose, beating the forecast for remaining unchanged. This is a very encouraging development for FOMC policymakers, considering that the core rate had remained unchanged for 5 straight months prior to yesterday's uptick. With core inflation showing signs of life once again, market participants could gradually start to price in a greater amount of tightening in 2018, especially if the labour market and the broader economy remain on a healthy track. Having said that, with the December rate hike being almost fully priced in by now, we think that the key driver for the dollar over the next weeks will be the likelihood for tax reform as opposed to monetary policy. In this respect, the House will vote today on the final version of its own tax bill. If it passes, then we would be one step closer to finalizing tax reform and the dollar could gain. Afterwards, the Senate has to vote on its own version of the tax bill, and if that passes as well, then the two chambers would need to reconcile their two plans and reach common ground. USD yen traded lower on Wednesday, falling below the support now turned into resistance barrier of 113.10 to trigger some buy orders near the 112.45 line before rebounding somewhat after the US CPI data. During the European morning Thursday, the pair is testing the 113.10 line as a resistance, where a break may open the way for the 113.80 hurdle. Having said that, as long as the rate continues to trade below the 114.30 obstacle, we would treat the latest rebound or any short-term extensions of it as a corrective phase. Aussie little changed after employment prints. The Aussie spiked higher overnight, but quickly gave back most of its gains to trade more or less unchanged following the release of Australia's jobs data for October. The unemployment rate dropped, but that was probably owed to a similar decline in the labour force participation rate. The net change in employment stayed in positive territory, but it was lower than expected. We should also note that the wage price index for Q3, released yesterday, accelerated by less than what was anticipated. Overall, these developments support the case for the RBA to keep its policy unchanged for a prolonged period of time and for the bank to maintain a relatively neutral tone overall. Aussie USD traded lower yesterday to hit support at 0.7570, near the medium-term upside support line taken from the low of the 2nd of January. The pair continues to trade within the downside channel that's been containing the price action since mid-September, but given our proximity to the aforementioned upside support line, we prefer to take the sidelines for now, as there is a decent likelihood for a rebound from there. We prefer to wait for a clear close below that upside support line and the 0.7570 barrier before we get confident on larger bearish extensions. As for the rest of today's highlights, during the European morning in the UK, retail sales for October will attract attention. The forecast is for both the headline and the core rates to have rebounded after having fallen sharply the previous month. The headline rate is expected to have entered the positive territory, albeit marginally, while the core is anticipated to reach the zero mark. Even though a rebound in retail sales could support the pound a little on the news, the focus for sterling traders is likely to remain on Brexit developments. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Hadjikyriacos, analyst at IronFX, wishing you solid trading.